Hey there, random internet strangers. It's Random Crypto Guy. Today is, let me get this out here, Sunday, May 30th, 2021 at around, well, it's a little early. It's actually 3:17, but the volatility's down, so I'm going to go ahead and give out the signal. For 5 p.m. Eastern Standard Time, the DCA for Bitcoin is 100%. For Ethereum, it's 94.8%. The buy the dip escrow is minus 54.2%, and the buy the dip signal for Ethereum is minus 71.6%. The all-in signal is 0% for Bitcoin, and for Ethereum it's 5.2%. Now, for those of you that are new, need to know what this means. What this means is the dollar cost average is an amount of money that you can afford to put away into a savings account. And it has to be consistent week after week after week. You have to have the same amount consistently, whether that's $20 or whether that's, maybe you're super rich and you can do $10,000. I don't know what your situation is, but this works for any amount because it's based on percentages. And so what these signals mean is how much you are going to allocate to each coin, whether it's Bitcoin or Ethereum, and then you will take a percentage of that and place it in 3 different buckets. You have your DCA bucket, your buy the dip bucket, and your all-in bucket. The DCA is how much you're going to purchase today. The buy the dip bucket is money that we set aside for these dips, like what's happening right now. And in this case, the numbers are negative. That means we're going to take money out of that bucket and buy the underlying asset with it, whether it be Bitcoin or Ethereum. So, for example, the buy the dip signal is minus 54.2% for Bitcoin. So whatever you have in that bucket, you're going to take 54.2% out of it and purchase Bitcoin today. Similarly with ETH, it will be minus 71.6%. So you are going to take whatever's in that bucket and take 71.6% of that and purchase ETH today. The all-in bucket, that is a bucket that we set aside a certain percentage, a dollar amount every week, that if it goes on fire sale, like it's just super suppressed price. So the last time, these signals, they occur on average about every 2.5 years. The last one we had was the coronavirus dump. That's how long. So we're still like a midway point in between where we would see a signal like that again, and then there's no guarantee that we'll have that. So and it's just week after week we put aside a little bit, and it'll depend on what price is doing. Determines how much we're going to set aside week after week. So for Bitcoin, we're not setting aside any. That means we're not putting money into that bucket, but we're not going to take any money out either. And for Ethereum, we're going to set aside 5.2% of your DCA. So if not 5.2% plus 94.8%, that equals 100% of your DCA. That's the money that you set aside. So let's go ahead and go to the calculator, and we will go over how we do this real quick. Those of you that are old hat to this, you can skip through this part and go to the charts, and we'll take a look at the charts after that. Those of you who are new, this is how we do it. So in our examples, we always use 100% or $100 as our example of how much money we can set aside every week to purchase whether Bitcoin or Ethereum. So with Bitcoin, the DCA is 100%. So that's really simple. So we have our $100, and then we multiply that times 100%, which is 1. That equals $100. So we're going to take $100 and purchase Bitcoin today with your DCA. The buy the dip escrow. Now, this isn't always 100%. So you'll see this with Ethereum. and these numbers will get lower and lower depending on what price is doing. And right now we're in a dip, so that we're going to be taking money out of that account, that bucket that I talk about, the three buckets. Normally, and under normal pricing action, the average pricing action, you would be putting money into this bucket. And whether it's 20% here, 5% there, 15% there, 40%, whatever it is, week after week, that builds up to a nice chunk of change. And so in our example, we use $1,000. Now, so we'll take $1,000 times by the dip is 54.2%, so 54.2%, that equals $542. So you would take $542 out of that bucket and purchase Bitcoin with it today. That way that's what dollar cost averaging with the beast mode method does. It allows you to set aside little percentages of money, so that when these big dips do happen, you have some dollars to purchase it. And what this does is it lowers the average of your dollar cost average. That's what buying the dip does. So that's what you would purchase today out of that bucket. And if you have done it last week, what you would do is whatever was left over from last week that was still in the bucket, you would consider that 100% of your bucket, and so you would take the 54.2% out. Makes it simple and always allows you to have a little bit of extra dry powder in case prices stay suppressed for a long time. But then they'll start smoothing, the average will start smoothing out again, and then we'll start rebuilding. So that's what we do for there. Okay, so and the all-in signal is 0%, so we're not going to take any money out and we're not going to put money in. And you'll see that in the next example when we do with Ethereum. So I'm just going to skip that one. And we'll go to the Ethereum. I'll go through a little bit faster so I'm not over explaining things. So we cleared that out. We go to the Ethereum. So once again, we're going to use $100. That is our example. It could be different depending upon your circumstance, whether it's $20, whether it's $10,000, whether it's $178.72. Whatever it is that you can afford and be consistent with week after week. That's the key, is to be consistent week after week. So we are going to purchase 94.8% in ETH today. So that would be, so you take your 100, multiply that times 94.8% equals $94.80. That's what you're going to purchase today of Ethereum. So that's going to leave some money left over, and we'll get to that in a second. But before we do that, we're going to go to the buy the dip signal. And this one also has a buy the dip. We're going to take money out of that account. So let's clear that out. And as I said in the past, as before, when under normal circumstances we put money into this bucket week after week, whether it's 10%, 50%, 100, 60%, 5%, whatever it is, and that adds up over time. And so when these dips do occur, we have a good chunk of change to pull out of that account and purchase Ethereum with it today. And once again, we'll use $1,000 as our example, times 71.6%. 71.6% equals $716. Week after week, so you have a nice chunk of change. So you're going to take that out of the bucket and purchase Ethereum with that today. That's how you work that. And as I said, if you get signals in a row, several weeks of signals in a row like this, we're looking at probably 3, maybe even 4 weeks of suppressed prices, the way the price action is looking to me right now, and then it'll start leveling off. But so we always want to, if you'd had a buy the dip signal in the prior week, what's left over is now considered 100%. So you would only take 71.6% of the new total that you had after you bought from the previous week into this week. That way you always have a little bit left over. So continuing on, now this one does have an all-in signal. So we'll go back to our example of $100 times 5.2%, 2% equals $5.20. Now that will go into your all-in fund, and what this does, that all-in fund allows you to accumulate dollars, and you keep them segregated off to the side. And so when these big dips occur, like a coronavirus dump, that was the last time we had an all-in signal, you'll have a fairly good chunk of change. And in that, like I said, the signals occur on average for Bitcoin. It's been to about 2.5 years on average that these signals occur. So they're few and far between, but they're very powerful. And then you have that extra little bit of money that you're just setting aside week after week to make a big purchase when those prices are super depressed. And like I said, if you're just starting out and doing this method, and you want to try this method, one of the things I often find people run into is that they have like a large dollar amount that they want to invest in Bitcoin, but they don't want to invest it at the wrong time. They want to invest at the peak of a price and have it lose half of its value, like I did over the course of these past couple weeks. So what I suggest that you do is you can either take that chunk of change and put it in the buy the dip fund. You can put it in the all-in fund, or you can split it up 50-50 or whatever percentages that you want to do. That way you know that you're going to be purchasing at suppressed prices as opposed to at peaks, peak prices. And we always want to be in the market and always purchasing, but we want to be smart about it. And when the market is trending fast and hard, we want to put less. We want a dollar cost average less in, and then when it's trending down hard, we want to put more in. And that's going to take the overall average over 2, 3, 5 years of time and lower that dollar average of whatever your purchase price is. That's what this is designed to do. It's not number go up or buy XYZ shitcoin and in 3 weeks you can retire. That's not how this works. But if you do this right and you have a reasonable amount of money, say you could easily retire probably, the way the numbers suggest anyway, through back testing, you could probably easily retire in 5 years with a DCA of about $200 a week. And that's a lot of money for some people, I understand. So, but this is a safe and effective means of saving for, whether you're saving up for a house or saving up to retire or whatever. And the more you can save, the more you can find that you can save, the better off that you'll be. And then if you have that extra money, if you have a fire sale, you can put it in the all-in fund, or you can put it in, split it up in percentages, whether it's the buy the dip fund or the all-in fund, so you know that you're always buying at suppressed prices. So let's move on to, let's put this up here one more time so you can see it. Dollar, you can write it down. And I was doing the BNB coin. I don't have my indicators. I'm not able to link them up to a BNB chart because I use MetaTrader for my indicators, and I couldn't find a suitable substitute for the indicators that I do use on TradingView for BNB. So if you so choose to do it, I don't recommend it, but if you so choose to do it, you can use the ETH numbers for the BNB numbers. BNB still has some issues that being a pre-mine is a big issue, and the centralization is also an issue with BNB. But overall, it has the network effect that I look for. Has the big network effect, and it has the time that it's been in existence. All those things together are very important. It's deflationary. That the pre-mine and post-mine, or the pre-mine is kind of a downer, but it's not a deal killer. And the fact that centralization is also, it's slightly decentralized. They have a board or something, I don't know, and some nodes and stuff. I got to do a little bit more research on it, but those they're not deal killers, but they are definitely areas of concern for the longevity of a project. But definitely Bitcoin and ETH definitely have got all the aspects of what I look for with something that for dollar cost averaging. I don't recommend Doge at all. It's inflationary, so don't even ask. So that's a deal killer right there. That it's inflationary. Moving on, let's go to the charts. We got a couple. This is for Ethereum. This is the 4-hour chart for Ethereum, and I made a tweet this morning. We have a confirmed lower high in here. This one was, I like to see 3. This one was just, it was too quick. It didn't jive with me as far as this. And this, we got more of a downward action here, and then now we got seeing some upward action here, and then we got 4 candles. So that is a little bit better of a confirmation. Now, it's not to say that that's absolutes. There's no absolutes when it comes to price action. It's just that the odds are stacking in our favor that this is rising again. But we still have this sloping downward, so we still do have a lot of downward pressure here. So I mean, but it's not as bad as like from here to here. This was big, this here. Let me draw this in right here. See how sharp this was, and then boom, it takes an abrupt turn. So it's still downward pressure down, but not as intense as before. So that pressure is waning, and then we got some increasing in the buy pressure. So we've gone from a negative slope on the buy pressure, where everything has been crashing down, right there, to a positive slope. So we got upward pressure, buying pressure, and waning selling pressure, which eventually will hopefully turn. The odds are turning in our favor. The price will continue to go upward, but it's no absolutes. It's just, it's a lot better. We bounced out of this nice box here. We got a lot of stack demand in here, so it's looking pretty good. Let's go to Bitcoin. Much stronger demand, not as intense of a bounce out, but then again, we're dealing with much larger numbers, so it just kind of looks that way. Here's our downward selling pressure is waning. So the slope of this line went from this steep slope to this more shallow slope, but still downward. So the pressure is still on, but not as bad. And then the buying pressure went from a downward slope to an upward slope, which means that it's starting to give way, and the buying pressure is getting stronger, and then much stronger stack demand. So Bitcoin's holding this market up right now with this big. There's a lot of demand down in here, so it's going to be pretty difficult to bust through this. It it didn't make it down. We still had a couple $1,000 to get through to the bottom of this stack right here, this nested stack. So and then we got our weekly and our daily bunched up, so that's, and when these blue lines start bunching up, that's another sign of strong support. So looking better, still not out of the woods yet though, not out of the woods yet. So probably more ranging. If it breaks this, we could see upwards, but it's just not going to go straight up to the moon. We got a lot of supply levels. These two stacked turncoats right here are going to be tough to get through. You got these two orange boxes. You can see them over here, the yellow line or the orange lines here. Got two stacked turncoats. So there's a lot of supply up there to bust through. So we're probably going to see a lot of ranging at this point. A lot of ping pong back and forth. Get through that. Moving on, you can always find me, my signals, at the pinned tweet, the Random Crypto Guy at forex_random. Put them in the pinned tweet, and I'm going to start putting the videos in the comments instead of here. It's just I want to put more information here, and then I'll put the video in the comments section. It'll be the first comment. And if you like what you see, go to the YouTube channel. Please support the YouTube channel, whether you like and subscribe it, or give me a thumbs up. And the affiliate links will also help out with supporting the channel if you find these signals of value. So I think that's about it for today. Just look at BNB real quick. Here's Binance Coin. You can see it's very similar structure to what Ethereum is doing. That's why I don't recommend doing it, because I just prefer to have if I had the indicators and I could have a chart on MetaTrader that worked on Binance Coin, which I can't find the workaround, and I do have a workaround, but I'm not going to spend the money unless I get more followers. It's really that simple. But I go and buy dips in here for some yield farming that I'm doing. So that I am doing. I'll let you know, full disclosure. So, but if this is something, it's passed the major tests, but it kind of flunks in the centralization and the pre-mine. So use Ethereum numbers at your own caution, at your own risk. So moving on, I think that's it. Yeah, that's it. So thanks for stopping by.